How's it going, friends and family? We have a stock analysis request from a viewer like you. And today we're going to be talking about NUTX, a physician-focused healthcare system that, for the time being, they print cash. As you can see on your screen right now, because they're crushing it in their operations, the one-year ROI, take a look at that. 306% into the green. Are you freaking kidding me? And it gets even better. So we jump on over to the financials tab and we look at their P&L. Their top line, their revenue is growing by 236% year over year. Having said that, we're going to be analyzing NUTX to figure out if it's a hidden gem in the rough. Like, is this a good opportunity? And to do that, we're going to be calculating a price target, a fair value for this company based on their own numbers and financials. And towards the end of the video, I'll be going over my game plan after doing my due diligence and research on the company. So if that sounds good with you, let's go ahead and get into it. So what exactly is NUTX Health and how do they make revenue? So they operate and run 27 micro hospitals. So you can kind of think of them as like the middle ground between a massive city hospital that has like 7 floors and your local clinic that only has like one physician that's like 85 years old. He's ready to tap out and retire, but he can't because the rural community depends on him. But that's besides the point. So NUTX, they offer 24/7 ER care and they can actually do surgery as well. However, they're in a setting that avoids the chaos, the wait times, and the bloatedness of having like 20 administrators that bog down the operations, and obviously that gets rid of the red tape as well. So NUTX is very lean and efficient with very low overhead costs. And when you take into account the executive leadership team, the C-suite, it's a bunch of medical doctors and a registered nurse. So in healthcare, based on my understanding, dude, doctors, they prefer being led by other doctors. Or I guess we could throw in any technical field into that conversation as well, right? And that's why I think AMD's crushing it, because Lisa Su, her background's not in finance. Her background, she's an engineer. She understands the entire process of chip making. She's a woman of the people, a leader that understands how the operation actually works. But circling back to NUTX, because they run the business with a clinician-first philosophy, putting and prioritizing the doctors, that means the operational decisions, it's pretty much filtered through patient outcomes rather than just, spreadsheets and hyper-focusing on the free cash flow. Now, don't get me wrong. I think traditional hospital systems that are led by idiots like myself that have an MBA, they can absolutely thrive. But at the end of the day, I do think I prefer NUTX's approach because it eliminates the friction between the suit and the people that are in the scrubs, if that makes sense. Now, mind you, this business operation, they don't even have 30 hospitals yet, but they're quickly and they're aggressively expanding. As I make this video, about 3 weeks ago, they just opened up another micro hospital in St. Louis. And then a little over a week ago, they also opened up another hospital in Houston. So I think this is an example of a business enterprise that gets it. When you're making a crap ton of money and your revenue's up by over 200% year over year, you better reinvest that back into the business so you can expand and scale to keep that revenue going for the long run. However, because they're in the business of opening up hospitals, I don't think we can just look at them by the top line or just the gross sales. I think similar to restaurants and retail chains like Walmart, Costco, Target, I think it would behoove of you to look at the same store sales. Like, is it growing? So I guess in this case, same hospital sales. Is the P&L increasing at each location year over year? So after digging through their 10K, I finally found what I was trying to find. On page 40, they refer to the same store sales. They label it, the terminology as mature hospitals, and the average visit growth was 6.5% year over year. And then obviously you can translate the per visit to convertible revenue, because each time a patient comes to your ER or urgent clinic, it's not because they just want to shake your hand and smile, right? It's because something's severely wrong. They need treatment, an operation, or consultation. Having said that, I think that's one of the reasons why Chipotle's in hot water right now, because their overall gross sales, it's increasing at a pretty juicy rate, but the same store sales, it's stalling, stagnating, or in certain locations and regions, is actually declining. But because they opened up more stores, the overall volume of money that they're making is increasing, if that makes sense. So let's move on to the cheese situation. What are the things that you need to take into consideration when evaluating and looking at NUTX? The first bullet point that I want to talk about is the secret sauce. So NUTX's secret sauce is a legal loophole that's allowing them to harvest cash like it's the gold rush back in the Wild West. So if you think about it, NUTX, they primarily operate as an out-of-network provider. So here in the US, the healthcare system is absolutely convoluted. So depending on who your insurance company is, there's an in-network healthcare system that you can go to, and then an out-of-network provider. So if you're with United Healthcare, they only authorize certain providers and doctors. If you want to go to an out-of-network one, you have to pay additional fees, or sometimes they outright won't cover whatever it is that you need. So that's something to take into account. Okay, so they're an out-of-network provider that takes advantage of the recently legislation that was passed, the No Surprises Act. And the No Surprises Act is a federal law that protects you from unexpected surprise medical bills by banning out-of-network providers from charging more than in-network rates for emergency services and certain care. But having said that, within the fine print, there's also the Independent Dispute Resolution, otherwise known as the IDR, and that's what they utilize and take advantage of in order to take the insurance companies to courtrooms. So instead of accepting $10,000 for simple operation or surgery, NUTX will take Humana, United Health, or Elevance to court in order to get $30,000 for that operation. So when you think about it, each customer, that revenue is being boosted by 150, 200, or even sometimes up to 250%. And that's why their revenue's up by triple digit numbers year over year. And in 2025, by taking the insurance companies to court instead of accepting the lowball offer, they've won 85% of their disputes. So it's a winning strategy and a recipe that's setting up their top line to be amplified beyond belief. But having said that, the market's not stupid. They understand they're playing with a legal loophole here. And that's why NUTX, their PE ratio is a 9. Trading multiple of a 9 despite the top line growing by 230%. Now, between you and me, this is absolutely a temporary tailwind because I think this is eventually going to be stopped and nipped in the butt once the insurance companies lobby hard enough, and with the whole Doge influence. I feel like this is a cash grab opportunity that's not going to last forever. Quickly moving on to the second point, it's insurance dependent. So 90% of NUTX's revenue is made from insurance payers, from Medicare, Medicaid, United Health, Humana. Only 10% pay out of pocket. That 90% figure takes into account their courtroom decisions that go in their favor. And something that you want to keep in mind is health insurance companies and hospitals, they butt heads all the time. Because, using that example earlier, right, they understand that a simple IV should not be costing $5,000, and that's what the hospital will try to charge. But the health insurance company will push back and be like, dude, we're not going to give you any more than $250 for that. So in this case, NUTX is taking them to court and saying, no, you're going to pay $15,000 for that IV. And as crazy as it might sound, they win those cases, which boggles my mind. Now, don't get me wrong, that's hyperbole, right? It's not going to be an IV costing $15,000. It's going to be other stuff. And the third thing you want to be mindful of is NUTX right now, they're under pressure because they're currently in the crosshairs of two major short seller firms. Number one is Blue Orca Capital, and number two, Capybara Research. And what they're accusing them of, it's not just minor complaints. They're alleging that NUTX is committing fraud beyond belief. They're gaming the system and they're cooking the books with financial engineering. And to be honest with you, it's one of those things where either side could be correct and accuse the other one of being wrong. It really depends on how you view their situation of them taking advantage of the legal loophole system. And now we're going to go ahead and calculate a fair value for NUTX based on their own numbers and financials. And by the way, this spreadsheet that you're seeing on your screen right now, it's available up on the Patreon. I created it myself. So if you want a second opinion on a stock, you can join the Patreon and play around with this spreadsheet or submit your stock request using the Google Forms link that's going to be in the pinned comment and also in the video description. So predicated upon the GARP formula, which is their revenue growth going forward in the future plus their profitability. The fair value estimate for NUTX right now should be $255, and they're $150 some a share. So they're about $100 below their fair value estimate. And by the way, very conservative numbers I plugged in, because I'm forecasting that their revenue is going to grow at a rate of 20% year over year, whereas, dude, this past 12 months, it went up by 230%. So 255 on the conservative low end. So the price that I would hypothetically pay with a margin of safety baked in would be $191. To remind you once again, NUTX is about $150 a share. And the next inherent worth calculator is going to be the multiples valuation. Essentially, we're going to reach a price target for NUTX based on how the market valuates their peers doing the exact same thing that they're doing. The median PE ratio for the hospital for profit system is around a 13.2. NUTX, their PE is around a 9. So if the trading multiple for NUTX were to go up to a 13.2, then they should be around 225. So the GARP formula says 250, the multiples valuation says 225. If we meet in the middle, around 230, maybe 240 a share is the fair value estimate. But I want to remind you, just because a company on paper should be like 250 a share, it does not mean that they're going to reach 250 a share. Case in point for PayPal, I think my fair value estimate for them is like $80. And they're dropping by the day. They're nowhere near 80, nor does it look like they're gonna hit 60, let alone 70 anytime soon. Then again, on the other side of that argument for Costco, I have their fair value estimate at about $800 a share, and they're currently like $900 something a share. So that would tell me that Costco is overvalued, or that they're trading for way too much of a premium. And for me to jump in, I would need a pretty big pullback or correction or sell-off. So when it comes to the compounder chart, where am I going to place NUTX? By the way, every single one of these companies that you see on your screen right now, whether you're sitting on the toilet or watching this video from your couch, dude, if you've never watched YouTube on a TV before, you've got to try it. Because when you're looking at it from a 6-inch screen, it's an entirely different experience when you look at it from a 50, 60, 70-inch screen. But anyways, Texas Instruments, Chipotle, Oracle, Trade Desk, Hims & Hers Health, every single one of these companies we have analyzed on this YouTube channel. So we're going to be comparing NUTX to their peers. All the way to the left is the S tier. Super excellent, superior, the best of the best in the stock market. Google and Amazon. Right below that is the A tier, Mercado Libre, Oshkosh Corporation, and Meta. And then the B tier, C+, C, D, and then obviously Chime Finance and Carter's is F. Probably not the best utilization of my capital because I have it labeled as the Kager graveyard. Meaning my ROI year over year is probably going to be less than that of the S&P 500. So we're talking about like maybe 4%, 5%, right? So having said that, NUTX, dude, this might get me a thumbs down, but I know their top line's growing at over 200%. And I'm going to talk about why I don't really believe that it's sustainable coming up soon. I'm going to put them right next to Cal-Maine Foods and Big Bear AI because they genuinely remind me of Cal-Maine Foods. Because during the whole egg shortage, bird flu, and inflation that allowed the egg prices to go through the roof, dude, Cal-Maine's valuation exploded, right? They were riding the wave of their growth catalyst. But now that all of their tailwinds are coming back down and disappearing, Cal-Maine's stock price is getting absolutely hammered. After reaching a high of about, what is this? Back in July, I guess we could say like 120, they're in the red. 35%, and they're currently trading for $77 a share, and they also have a PE ratio of a 3.2. Because what I'm trying to say is sometimes the market can be absolutely irrational and wrong on many different things, i.e. when we think about Nvidia or Google of last year or the military stocks in general. But in the case of Cal-Maine Foods and NUTX, I think they've got it right, and that's why they evaluate them so lowly, because they know that their tailwinds were absolutely temporary and the gravy train's coming to a halt. So when it comes to NUTX Health, dude, I really love their ticker symbol, NUTX. Maybe I'm just immature, but I find that absolutely hilarious. Let's talk about my game plan as we digest and analyze their numbers and financials. When it comes to NUTX, I mean, there's no denying it, right? The growth of their top line is just absolutely bananas. In a normal year, it goes up by 20% or down negative 33%. When they have that legal loophole and they're taking advantage of it, then it goes up by 236%. And as we scroll down and take a look at their bottom line, unprofitable in 2022 and 2023, dude, are you seeing what I'm seeing? Dude, you might want to pay attention. Their bottom line per share in fiscal year 2022 was negative $100 per share. So they were losing a crap ton of money in order to keep the lights on in an accounting basis. So I would argue their EPS, their bottom line, really volatile, inconsistent. As we jump on over to their cash flow, couple things that I'm looking at here. Stock-based compensation. Oh my gosh, that trend is, whoo girl, that's pretty bad. And something else that I want to take a look at is their free cash flow situation. Up and down, up and down. I'm telling you right now, there's a parallel. Why I compared them to Cal-Maine for a reason. They look so freaking similar. Free cash flow per share is $25.58. Pretty good. Speaking of which, might be a really good time for us to take a look at Cal-Maine. Their free cash flow situation is pretty much the same, like highs and lows, pretty volatile as well. But having said that, I want to figure out their trading multiple based on their free cash flow. So $25.58. We're going to pull up my ghetto calculator right here. Trading for $153.76. We're going to divide it by $25.58. So their price to free cash flow ratio would be a 6. I mean, their PE ratio is already an 8.5. Next year is 8.8. I don't think it takes a genius to know that the Seattle Seahawks are going to go to the Super Bowl. Whoa. No, but I don't think it takes a rocket scientist to know that the market's absolutely bearish about them. And if we jump on over to take a look at their balance sheet, $166 million on the books, that's pretty healthy for a hospital system, because I know the P&L for a hospital, it tends to look pretty rough. Total debt, $358 million. It's not too bad in relation to the cash on the books, but the more sustainable method is the debt to EBITDA, 0.94. It would take them roughly 11 months to pay off all their loan obligations, which I don't think is that bad. And speaking of ratios, something that you want to take into account is when we look at the ROIC, the return on invested capital, it's so freaking inconsistent, right? Sometimes it's spectacular at 70%, or in this case, 47%, but other times it can be negative 1.3%, negative 0.38%. It's not consistent, nor is it reliable. And again, if we take a look at their bottom line, which is the net income, they have periods of trending upwards, up and to the right, and then sometimes it's just falling off a cliff, right? So inconsistent is how I would label NUTX, knowing full well that in the short term and in recent history, things are spectacular, but in their DNA and timeline, it's inconsistent. So when it comes to NUTX, dude, this might be unpopular, but I think I'm going to pass on this one. I'm not even going to bother putting them on my watch list. And I know some of you might be like, dude, you're being an idiot. How could you not when their valuation is this low? Look, I get it. The numbers look ridiculous on paper, but just as quickly as they jumped up and exploded in valuation, I think they're going to crash just as fast and just as hard. Case in point with Cal-Maine, the egg producer. Just as fast as they went up, they're crashing just as quickly. And I think the same is going to be true with NUTX. As soon as that legal loophole is fixed or is altered because of the health insurance companies lobbying super hard in DC, I think it's only a matter of time before that loophole is going to be closed. I'm not a betting man or a gambling man, but you really think Humana, United Health, they're just going to sit there and take a dong smack to the face year after year? No, they're going to do something to close it up because it's ruining their margins. It's ruining their overhead costs to run their operation, right? And besides, when I want to buy a stock, I don't just look at it as a stock, right? I look at it as a business operation where I would show up on a Monday morning, open up the keys to the doors, and I'm the business owner of it, right? So I only want to buy dividend compounders with cheese. And when I do that, I want to know, if their business model is durable. Is it predictable? Is the cash flow going to grow consistently year over year? But friends and family, in the case of NUTX, they're making ridiculous gains right now from a legal loophole. And I know what I just said might sound harsh, but I think their future, I don't know if I'm just looking at it too level-headed or grounded, but I think their future success is unpredictable. I don't know what's going to happen, right, in the next 6 months or 12 months. But in the case of like Google, but in the case of like Huntington Ingalls, or in the case of Lockheed Martin, you kind of understand what's going to happen because their business model is predictable and is consistent, and their success is not tied to a temporary loophole. I know I keep saying temporary, but I'm calling it, dude. I think it's going to be altered or modified, or they're just going to get rid of it altogether. So, but more importantly, I try to be generous. But with NUTX, I really don't see an economic moat. Do they have an intangible asset? No. Do they have economies of scale? No. Ecosystem? One could argue, but I don't think so. Number 4, do they have a network effect? No. High switching costs? No. Cost advantage? No. Regional dominance? No. Brand loyalty? That one, I think a case could be made, but probably not. But here's where I'm trying to come from. This is all hypothetical, okay? If you take a look at their total stock market history, it's rough, okay? Negative 90% into the red since their IPO back during the pandemic days when every company was trying to IPO. They debuted on the stock market at $1,351 a share. Since then, dude, it looks like one of the worst investments in stock market history, right? But if you take a look at your screen right now, in 2024, they actually reached valuations that were ridiculously low. I'm talking about like $6 a share, $5 a share. So what I'm saying is if I got lucky and I timed it perfectly and I purchased shares of NUTX for like $5 a share in 2024, then I'm jumping up and down. I'm literally running in the streets butt naked and celebrating because I got a home run with this one, right? Like 10, 15x my money. But the idea of buying into them right now, I feel like that's way too much of a dangerous game because the upside I feel like is limited in comparison to their floor of how much they can fall. The downside I think is a higher probability and statistic than the upside, if that makes sense. And because the fair value models shows that their inherent or intrinsic valuation is around 220 to 250 a share, I would jump ship with profits if I did buy into them back in 2024 as soon as they get close to that $200 number. That's just what I would do. I'm not trying to tell anyone else what to do with your money, but this one, I'm not saying that it's a sinking ship, but what I am suggesting is that it's not predictable. And so on that note, I could absolutely be wrong, and NUTX could defy the odds and go up to $300 or $500 a share. But what I'm trying to suggest is that if there's two short seller firms that are going gung-ho and wanting you to fail, and big money's not putting their money into it, and that's why they're trading multiples at an 8, I think most people are understanding that they're running a loophole system that's propping up their numbers for the short term. For the long run, a dividend compounded with cheese, I just don't think so. They don't pay a dividend, by the way. So I know I said a lot. What do you think about NUTX? Do you love him? Do you hate him? What am I getting wrong when it comes to NUTX? And by the way, it's pretty funny how life works, because as we are wrapping up our analysis on NUTX, off the camera, I started watching St. Denis Medical. It's basically a mockumentary TV series that's kind of like The Office, by the way. If you like The Office, I think you would really like St. Denis Medical. But anyways, it portrays the craziness that happens on a hospital floor with all the various nurses, staff, admin, doctors, and I think it's pretty good. It's just as silly and chaotic as Dunder Mifflin. You can quote me when I say that. Fun fact about me is I could never work in any medical setting. Not as a doctor, not as a nurse, not because I'm stupid, but because I'm the kind of wuss that gets really woozy and I don't deal too well with blood or the sight of bodily fluids. Dude, I get so grossed out, I can never do it. But having said that, I hope you guys have a good rest of your day. Stay safe, good luck in the stock market, and out.